Here in our studio, Brzezek. Jan is the CEO and co-founder of Cryptofinance with its asset management, institutional trading and Cryptospace department based in Switzerland. What is the place of cryptocurrencies in nowadays world economy and especially in Switzerland?
I think it's still relatively small compared to all the other assets. But I think it has its place and it will further grow. I'm a strong believer that it's here to stay. And the next year will show if more and more governments will regulate it, will allow it, will prohibit it. We'll see. But I think it will grow and it will be a success story and it will be kind of an alternative currency or store of value or applications, because you can put shares, equities on the blockchain as well. So you will have thousands of applications for it.
What about Switzerland, especially?
Switzerland is, how should I say, they're supporting it in a passive way. They allow the businesses to grow. They need to work within the boundaries of traditional finance. So, for example, for our asset manager, for our funds, we're regulated asset manager in Switzerland. We need to apply the same rules and regulations as any other mutual fund a fund is doing in Switzerland. But I still expect that they come up with a regulation on ICOs especially, probably next year.
Why next year?
They gave some statements that they are watching the business development carefully and they are thinking about it and they will see how it's progressing and then they will come up with a statement which should control the currencies and the market but not let it die.
Okay. What are the features of government and regulation of your country in this sphere, and tell us about the jurisdiction. Maybe the government of Switzerland has already prepared some rules to control cryptocurrencies, or what they think about it.
So I don't think that all of the cryptos are currencies, right? As I said, there are several applications. You can have a transactional currency, or you can use just for transacting to pay something. But I see Bitcoin rather like a digital gold, a store of value. And then you have Ethereum with the smart contract functionality, which is more like you can put shares on Ethereum and issue ERC20 tokens, so then you have UBS shares, etc., on the Ethereum blockchain. And I don't think that they will come up with just one regulation, or I hope that they won't come up with just one regulation, because there are so many different applications. So you cannot just put all of them into one regulation. So I hope they will, and that's at least the strategy and the regulations so far in Switzerland, that the rules or the law in Switzerland is technological neutral. So 100 years ago, you had a share registry, a physical share registry, a book where all the transactions were written in. Then you moved to a digital share registry. And now in the future it's going to be a decentralized share registry on the blockchain. It's still shares, it's just distributed. So I hope they will treat it accordingly.
We well know Bitcoin, Ethereum, a Litecoin, and there are plenty of small cryptocurrencies which are born and die every day. And can we say that there is some economically feasible amount of crypto?
We are focused on the top 10, top 20 by market cap, so really just on the large ones. Basically, that's part of the technology. Everyone can set up his own token, and you don't need to invest in that. So it really, if you want to go into cryptos, make your due diligence, make your research, be sure what you're investing in, that you feel comfortable with the team behind it and the technology itself, and then invest in it. So there's no limited number. If you put the shares or every car, you could issue a token for your car. Then you can transact and you can sell it to someone else, and he sends the money, the Ether, to a smart contract. You send your car token to the smart contract and it will exchange, so that you can exchange ownership of a car or land. There are applications or proof of concepts in Sweden at the moment, Chromaway. They're putting the land registry on the blockchain, so you will have millions of tokens but asset backed, so there is something real behind it. And then I think there's not one number for it.
Talking about the latest news about Bitcoin and its high growth. Yes, as early as summer of 2017, Bitcoin traded at the exchange for $593 per coin. Ethereum was for just $18 per coin. A year later, by July and August, these indicators changed dramatically. Bitcoin in August increased to more than $3,000. Ethereum by July for more than $300 per coin. And what do you think? What led to this?
I mean, there is a fixed supply of Bitcoin. So if the demand increases, the price goes up naturally, and that's what we are seeing at the moment as well. There is just growing interest in cryptos and in Bitcoin in general. It just it's not like any other asset class where it's more developed, or you have a central bank behind it who can control the supply a little bit. Here it's just defined by the algorithm and by the blockchain technology. So compared to last year, to this summer, it was just a higher demand for it. And in summer, in start of August this year, I bet with a friend that we will see Bitcoin at 10,000 by the end of the year. And it was quite a good bet, because I thought, okay, I need to be a bold move and bold statement, but I was not really sure. And now we're on 15,000, even 17,000. It's just insane. But this will come down as it always happened before. You have a huge volatility. It will come down to 12,000, and then it will go up to 20,000. I think it goes up because of the demand, but you never know. If the demand is decreasing or is not there anymore, the price will drop massively.
Demand was caused by Japan, or?
No, I think by the first for tradition. One is the hype in the media. Everyone said Bitcoin. It was in all the newspapers and televisions all the time. And they said always it's bad. If something is bad, it's probably interesting for investors normally. Then the other thing is we have seen a huge bubble in equity markets, in the bond market. In equity markets, with the quantitative easing, they expanded the balance sheets of the central banks massively. And with the negative interest rates in some countries, there was just, you don't get any return anymore for traditional assets. So that's why more and more investors are looking for new returns, and that's why they go into cryptos, because the return was massively.
Okay, thank you so much. Thank you for the interview.